Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 28th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. And Ed, I know it's the day after Thanksgiving. We've got a lot of full tummies out there, but earnings season is still ongoing. So, what do you have on tap for us today?
Yeah, earnings season has died down, but we have a few leftovers that might be tasty. American Eagle Outfitters, MongoDB, and CrowdStrike.
All right. Well, let's start with American Eagle Outfitters, which is scheduled to announce Q3 earnings on Tuesday, December 2nd. Earnings for the clothing brand are projected to fall 8% to 44 cents per share, and revenue is seen rising 3% to $1.32 billion. And here's why we're watching American Eagle. We'll want to know if American Eagle will follow Abercrombie and some other apparel makers with a bullish outlook. And American Eagle is trying to turn higher, and will the Sydney Sweeney effect continue? And Ed, as the Sydney Sweeney ad that went totally viral, helped American Eagle have an earnings blowout in the previous quarter. And now the company is hoping maybe Martha Stewart can give them a little bit of momentum here into the holiday season. But what's on your radar with AEO?
Yeah, this is one, youth apparel suddenly starts looking good again. And this is the one that was looking pretty good heading into this week. So want to see if we can see that turnaround. Yeah, there was positive earnings for the first time in a long time last quarter. Can that continue? Can you see the revenue turn higher? Because there was a long string of declines. There have been a big run in some of these names, and then there was a big sell off. So yeah, I want to see how that is. Beyond we all these things about Sydney Sweeney impressions. Are we really seeing? Is that really is that really generating sales and continued sales? Uh, so definitely want to see how if that turnaround heading into the holiday season is going.
All right. Well, let's see what story the chart is telling us, Ed. And we see AEO is trading above a buy zone after powering above this 1876 buy point out of a cup with handle base on November 21st. So, how are you hoping this sets up here heading into earnings?
If I were hoping it was setting up, I'd hope that Urban Outfitters and Abercrombie hadn't reported this week because now it's broken because it's moved out on this. And so it's just a tricky situation because do you buy it right ahead of earnings? I mean, yeah, but now it could be a situation where it disappoints. It even does fine, but now people are expecting even better numbers and the stock sells off. So it's extended now right into earnings. I mean, maybe if it gradually pulls back, but honestly, that doesn't happen too often with earnings. I mean, you can get lucky and drop and buy it, but that's just that's tough because it's a tough situation having a high volume sell off and then saying, I'm going to buy it. I think it's going to work out. And it does sometimes, but so I don't know what you do here. I guess maybe if it could form a high handle kind of thing or pause here, like after earnings sort of gyrates around for a while. But the train may have left the station already, on this one.
And I want to look at the weekly chart because it looks here that it's close to a buy point in a cut base with that 2043 buy point here. So could be a possible alternate entry here, Ed, looking at the weekly.
You could. And with certain handles on, sometimes the handle on a daily just, is so tiny and it just doesn't look real. And so, okay. But I think this one did have a shakeout. I mean, so even though it's not there on a weekly, so you can use it, but I feel like it's already getting up there. There was a clear shakeout. It pulled back. It even tested the 50-day line. So I feel like that was a real legit handle. It was a little low. So I don't think I would do that. It's already a fair amount above the 50-day and 10-week line. So, and you're heading right into earnings. And if there's a stronger number, then it's just going to even more. So it would feel a little bit high there. But it also shows that it's still coming up. There's still a lot of overhead resistance. There's sort of a line about, you can sort of see that, a little bit further, that's just sort of straight up and down line. And that is like, it should marks 18 months of how much trading there is. And usually we talk about, well, that's where overhead resistance is. There's still a lot of people who bought this that are disappointed and maybe want to get out. And so that's just something to note. Maybe it comes up to there, maybe it pauses there, forms another base or forms some kind of handle. So there's just things to look at. But again, you can see here that we're in the middle of seemingly a turnaround. And now we have to see if that happens and if it can continue from there.
Yeah, as you mentioned, we had a few quarters of earnings losses here that turned around in the quarter ending in July. Um, but any other thoughts on the fundamentals? I mean, the RS rating has been trending higher over the last couple months. I mean, AEO seems like it's in a pretty good position.
Yeah, I mean, with certain things, you have to ride the fundamentals ahead of time, and you can sort of you're guessing, you're betting that the fundamentals will change. I mean, it helps that the comparisons are easy, but sometimes, sometimes it's a situation where the stock said you want to buy them as the turnaround is just getting going, or you can see the turnaround coming ahead. Because if you wait for the earnings to really come in, they may be near a top. Because you can look and see when this stock peaked. I mean, it wasn't the ultimate peak, but when it peaked last year, there were some good numbers going on. There were some good numbers, but and so that just it just made it tricky. If you really waited till that really got going, there was a bit of that. But if you got it when it was first starting, that's that was when there was a little bit more move in there. Like maybe that or the next quarter was like this huge gain. It's like okay, but even then it took a while. But yeah, so it's just it makes it a little tough to buy these stocks.
All right. Well, let's move on and take a look at MongoDB, which will report Q3 earnings on Monday, December 1st. Earnings for the software play are expected to fall 31% to 81 cents per share, and revenue is projected to rise 12% to $539.9 million. And here's why we're watching MongoDB. Investors tend to focus on Atlas Cloud growth for this company. It'll also be the first report for its new CEO. He'll get a chance to lay out a vision for capturing AI demand. And Ed, that AI demand is really central to the growth theme here. Our favorite analyst over at Wedbush, Dan Ives, is bullish on MongoDB. That may not be a surprise to you, but saying that its cloud database and new AI tools could really help drive the company to beat Q3 revenue forecast. But what is on your radar with MongoDB?
Yeah, it's exactly all that. Mongo has a relationship with Amazon, I believe. Yeah, this was the focus of our New America, very recent New America, and talked about how it's moving into that AI space. And the New America is great for doing that. Go just enough of a dive. It's not deep sea dive. It's a deep dive in a regular pool. So you get just enough exposure, understand the business and maybe some rivals. Yeah, and just so that's just a huge growth opportunity for them because you look for an established player, what can make it accelerate again? It does seem like we're going to see growth has been pretty strong for this name in recent quarters. There's been some acceleration on that name. So yeah, just it really gapped up on the last earnings report, but have to see how it does from here.
Yeah, and we'll go ahead and switch to the chart then because we can see this gap up. It gained almost 38% that day. And, it really held moved a little bit higher, held those gains, formed a flat base, broke above that 344.85 buy point on October 27th. And, it's pulled back with the broader market volatility that we've seen in recent weeks and now is trying to perhaps retake this 50-day line. So, talk to me about the technical action and what you would like to see happen.
Yeah, you would like to see this stock back above the 50-day line, but in the context of earnings, probably wouldn't want to be buying it anyway. I mean, so ahead of that. So ideally what happens is that on earnings or after earnings, it's not just above the 50-day line, but maybe back above the old buy point. Now, you can argue that buy point is no longer valid, but at that point, you could do a downward sloping trend line. It's pretty steep from the sort of around there. And honestly, that would sort of line up. I mean, by the time, those things would sort of line up. So either way, so if it got up to 345, 350, that area, it would seem like there would be an opportunity to buy, however you look at it, while still being relatively close to the 50-day line. So that would be the ideal situation that there could be a buying opportunity. But yeah, it's one of those situations like this could be where it falls apart. It's right there at the 50-day line. This could be a disaster or it could even move up and then reverse lower. I mean, you just have to watch out with something like that. But this one does look it's potentially interesting, but it's not actionable right now for sure.
And I'm just going to switch over to the weekly here. Ed, any thoughts on the weekly chart? Again, we can see it's coming up to this 10-week moving average, the RS line has been in a downtrend here over the last few weeks. But as you mentioned, pretty good EPS growth that's been accelerating. That revenue growth also pretty solid in the double digits here.
Yeah, but we're going to supposedly see some declines. I'm not sure if there's heavy spending. I mean, revenue growth is slowing too, but really seeing a decline. So that is something to take note. So it's just like, analysts know that, but it's one thing to know it, another thing to experience it. People may be hoping that they really beat views and that the decline is modest or that they don't actually have a decline. Also, just looking at the chart, yeah, there's that huge gap up last quarter, but you can see the gap downs on a number of these quarters. Not all of them, but you can see a lot of gap downs. So this is going to move. Okay, you can't just say, well, it's a software company. They have steady revenue growth. I'm sure. No, this is going to move a lot on earnings, almost certainly. Whether I don't know what direction it'll be. So that's one reason why we talk about waiting. It also suggests that options would be expensive. I haven't looked at that, but when you have moves like that, I mean, to buy options on this, presumably it'd be pretty expensive to do so.
All right, so we'll just be waiting on this one and see if it can clear some of these levels here around the 50-day and this prior buy point around 345, Ed. But let's go ahead and dive in on CrowdStrike, which is scheduled to report on Tuesday, December 2nd. The cybersecurity company is expected to see fiscal Q4 earnings up 1% to 94 cents per share, and revenue is expected to rise 20% to $1.21 billion. And here's why we're watching CrowdStrike. After a tough past year stemming from that 2024 global outage, is CrowdStrike ready to rev up growth? And Ed, analysts seem to think that they will be. At least 12 analysts have boosted their price target for CrowdStrike ahead of earnings. But what will you be paying attention to?
Yeah, I want to see that turnaround. Want to see the turnaround. That's and I can see, maybe annualized revenue, sort of like an idea of a flow, what's coming ahead. Just any signals that not just this quarter, but it's really coming in. The comparisons should be pretty easy. Getting this because there's a lot of they probably had to provide decent pricing or discounts to satisfy a lot of customers. The revenue growth has been okay in the past year, but earnings have not. I mean, they've just been sort of flat. So that needs to turn around. It has a high valuation. It needs to generate real growth to justify that. And a lot of people seeing that people see this as one of the better names in terms of cybersecurity products, but it really needs to show that kind of growth.
And just looking at the chart, Ed, we see CrowdStrike attempted a breakout here on October 8th from a 507.20 buy point. It tested the 21-day line, hit this high of 566.90, but again has since pulled back. It's given up those gains and is now trading just below the original buy point. So again, what are you looking to set up here?
Yeah, I mean, and this buy point I think is clearly still valid, though it was a pretty good round trip. It was a round trip of 10%, which isn't great, or 10% or more. Yeah, you could, I would think getting above the 50-day line is important. I mean, even though that's higher than the buy point, I think you really want to get above that. And hopefully it does that on earnings, like it gaps up a little bit, whether you buy it, above the 50-day line, there's also probably a very steep trend line. That isn't as steeper than I like, but given that there's other entries, it at least gives half a reason to buy it too, all in that same area. That's what you want to see it go in there. Uh, you know, and we'll just have to see how that goes. Again, it's just on that edge. It's potentially interesting, but it's not there yet.
And just jumping over to the weekly, Ed, again, we can see hopefully earnings starting to turn around here. But talk to me about fundamentals and what's jumping out to you.
Well, the fundamentals again, they slowed quite a bit, and we knew that that was happening. And I think it really didn't surprise people on the earnings side. It's supposed to turn around. Yeah, it did. We did get an increase again. There was a decline, but it's not really supposed to turn around until maybe the April quarter to really start seeing the year-over-year gains. And that's partly because the comparisons are easy, not because it's an amazing growth, underlying. So have to see that. And this stock has already gone quite a bit because after plunging all that, the stock hasn't exactly meandered and waited for things. So while the stock has doubled from those lows and more than doubled, not fairly close to almost tripling at one point, the earnings line has been really sluggish over that time. And so you need that earnings line to turn up. And with the angle that stock is going, you need that earnings line to pick up again.
All right. Well, those are some of the top names on our radar, but there's always some more to look at. So, why don't we start with Credo Technology? Earnings there due on December 1st. And this one retaking the 50-day line on Wednesday, the 26th here. But talk to me about this one. It seems like there's been a lot of chop and volatility over the last couple of months.
Yeah, and this one might work. And I suppose if it hadn't been for earnings, you could have made a case for buying it today. But I think that just raises the risk because it's not that many days away. I mean, that we're coming in. So this could go all over the place. You might, a week from now, we might be saying, wow, this went up 30%, and anybody who bought it now ahead of those earnings were just like, you're a genius, right? But it could also fall and it could also gyrate. It also could go up and then fall down or reverse lower. You get shaken out and come back up. It just seems too messy, but it is definitely one to watch. The fundamentals are tremendous. So, I mean, for all that, I just like it to be calmer. And again, that just seems too much for me, but I see why people like it. There's great earnings. It's gone on an enormous run. I mean, look at that from the April lows. This was below 30 and it went up to almost 200. So, I mean, it's really gone on a move, but the earnings have come in too. This isn't, so, I would like it to calm down, but like for later periods. So like, a month from now, 2 months from now, I can buy it. But that's me. I just think it's too volatile at this point. But definitely want to keep an eye on going forward.
All right. How about we take a quick look at Salesforce earnings there due on December 3rd. And again, this one has been in a downtrend. I'll switch back to the weekly here. You know, fell off these highs earlier this year back in March and has really just been fading lower. But I'm assuming comments here will be important for the software sector.
Comments and like, can they really revive growth? I mean, it's been fine. The growth has been fine, and maybe the valuation is so low, but that's not really the game we play. That it's getting low enough after all this decline because earnings have continued to grow. I mean, and so like the earnings line is there. So what at some point people might see as a value play. That's not really how we do things at IBD, but it just seems like a lot of repair work. I mean, this stock recently was undercutting lows to basically to 52-week lows. So the lowest level since back in there. It just needs like a lot of work. Now, maybe it gaps up 30%, and it's one of those whoa, this everything's turned around kind of thing. And you start looking, and then you wait to see if you're going to really pause. But that relative strength line looks terrible. It's important for the software industry. This is one of the bigger names. Again, we're getting to the place where one of the later names. So if we're looking for insight for how October, November went, we're starting to get insight from that, above and beyond whether or not we care about the specific stock.
All right. Well, we talked about CrowdStrike. Let's talk about Snowflake, another cybersecurity name. Earnings here on December 3rd. And this is another one, Ed. Again, had that ugly kind of downside reversal on the 20th. That was mirroring kind of the broader market action there and is now making its way back above the 50-day line and is sitting right at this round 250 level.
Yeah, it's actually, yeah, it's back above the 50-day line. So this data analytics firm is really one to watch here. But the thing is that this one really, it's been volatile and the earnings are coming up. And it also has a tendency to look at the last earnings report. It gapped up, but then it gave up a lot of the gains. So if you bought the gap up, that would have been hard. The previous time worked, but there was a few other quarters ago where it did that and they sort of meandered for a while and then came lower. So, it's hard to, this one doesn't, so just earnings gaps are often, you have to have a lot of steel to do that. But this one just seems like it has a tendency to make some up and down moves. It doesn't make that particularly appealing. It'd be great if it could just sort of set up again, form a new base, or maybe just gyrate. If it didn't move a whole lot, then maybe that old buy point would still be valid. But if it made a big move, that might be tough to swallow given its history.
All right, how about Guidewire software earnings scheduled there on December 3rd? And again, this one attempted a breakout back here in September with a 263.20 buy point. It immediately rolled over and pulled back to the 50-day line and is now trading well below the 200 at basically all the key moving averages here. So, what would you like to see set up here, and what might we learn from these earnings?
Yeah, maybe a setup. I definitely think the last three earnings reports, this is gapped up, and the last two times it's immediately come down. The other time it sort of rose for a little bit but rolled over. So none of them really worked. Like sorry, the one before that. I apologize. So there were some ones that worked, but that one. So it has a history of gapping up and definitely coming back down. So if it gaps up, I mean, there could be a double bottom base in there that comes in, but I would wait. Given its history, I would wait to see then if it can hold it, maybe then provide an entry after a while, rather than buying on earnings, given its history of gapping up and falling back.
Okay, how about we take a quick look at Marvell Technology? This is another semiconductor name, and this one, technically in this buy zone back from this consolidation here in October. That was an 85.27 pivot point, but again, another one that's had a lot of chop. Broke below this 50-day line, but has now retaken that key moving average.
Yeah, again, this might have been like this action right here might have been viable. I mean, whether you could sort of treat that buy point as still valid, it's sort of, but it's that way in breaking above the 50-day line. This one makes custom chips for AI, but it teams up with Amazon. So there's been a lot of attention on Google and Broadcom with their custom AI chips, but Amazon is makes a lot of effort there too. So I think that's one reason why Marvell this week has made such a big move. It'd be great if it could set up again, maybe the recent highs from a few weeks ago, provide sort of create a new base. I don't know if it's going to do that. It's given its big drop, big up, it may not settle down with earnings. But one to watch, you can see how the earnings, are now ramping up this last several quarters as it sort of moves into the AI space.
All right, let's keep going here with Pure Storage at another uh, computer name here. This one trading just below the 50-day line. But thoughts here?
Yeah, this one has had a really strong performance here, but needs to, revenue growth has accelerated recently. Earnings have turned lower though, and that's supposed to turn around. I'm not sure what the reason why it fell back. They might have been doing a transition to subscription based, or there was something else. But acting well, I mean, I suppose a strong move over the 15 line might be something you could do, but it was a pretty sharp drop through it, as opposed to just coming down and finding support. But yeah, this is another one that makes big moves on earnings. I keep on saying it, but there really are. It's sort of like, oh, you can see that from space. It feels like a lot of these stocks, you can see the earnings move without even having to glance at where the earnings reports are. So just keep that in mind.
All right, how about we wrap with a look at Five Below, the discount retailer earnings due on December 3rd. And, this one, Ed, looking pretty strong, trending toward these 168.98 highs here. So what are you looking at with Five Below?
Yeah, I wish it had been around the 50-day line. I just sort of like it. Just feels like this is one. It's not growing at a tremendous amount, and so it's had a pretty big run from the lows. It's tripled from the lows back in April. The growth is fine, but it's not, it's had some good quarters lately, but it's not supposed to continue that, over time. So like next year, 10%. So it just, it's supposed to start falling again. It's getting a little stretched there. So if it has a good reaction to earnings, it would seem like it's out there. There is an impossible emerging consolidation, but there's the risk that it just sort of blows by that. But yeah, so I just want to see, like, is the growth going to really fall off that much, for the next year, or is it going to, do a lot better than expected here?
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this installment of Earnings Cheat Sheet. If you want more market analysis, be sure to tune in to Stock Market Today. That goes live after the closing bell. And thank you so much for watching. We'll see you all next week.